all, welcome to my YouTube channel. Here I'm going to upload income from capital gain part 8. So under this part, I'm going to cover exemptions to capital gains. Capital gain under there are totally 8 exemptions of capital gain. Exemptions under section 54, exemptions under section 54B, exemptions under section 54D, exemption under section 54EC, exemption under section 54F, exemption under section 54G, exemption under section 54GB, and exemption under section 54EE. The first exemption under section 54. Exemptions under sections 54. It means exemption is under this exemption is available on the capital gain on transfer of long-term residential house property and constructions or purchase of new residential house to individual or Hindu undivided family only. This exemption is applicable individual person and Hindu undivided family only. If it is assessee any long-term residential house, if it is sold, and apart from that, if it is constructed a house or purchase a new residential house, then he can eligible to claim under section 54. ಅಂದ್ರೆ ಒಬ್ಬ ಮನುಷ್ಯ ಅವನಲ್ಲಿರೋ ಹೌಸ್ ಲಾಂಗ್ ಟರ್ಮ್ ರೆಸಿಡೆನ್ಷಿಯಲ್ ಹೌಸ್ ನ ಸೇಲ್ ಮಾಡಿ ಇನ್ನೊಂದು ರೆಸಿಡೆನ್ಷಿಯಲ್ ಹೌಸ್ ನ ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಮಾಡೋದಾಗ್ಲಿ ಅಥವಾ ಪರ್ಚೇಸ್ ಮಾಡೋದಾಗ್ಲಿ ಮಾಡಿದ್ರೆ that cost is eligible to claim under section 54. Conditions: assessee have to transfer only long-term residential house. The second condition: only individual or Hindu undivided family HUF can claim such exemption. Third one, he should not own any other residential house. Fourth one, acquisition of new residential house. Then amount of exemptions. 54 under ಅಲ್ಲಿ amount of exemptions na find out ಮಾಡೋ formula. This one it is. Cost of new residential house including deposit under capital gain account scheme or gross long-term capital gain. Whichever is less, that amount is a amount of exemptions. Got it? This is one of the example for that, which applicable to the 54A. The question is like that. Dilip of Delhi gives you the following informations regarding the residential house owned by him. The first information sold on July 10, 2020 for Rs 30 lakh. Date of purchase October 1, 2004. Cost of acquisitions 5,65,000. Cost of improvement in December 2004 rupee 22,600. Expenses on transfer 10,000. He purchased new residential house on 2012-2019 at Chhattisgarh at a cost of rupee 25 lakh. CI for 2004 and 5 113 and for 2020-21 301 you are required to compute taxable long-term capital gain for the assessment year 2021-22. This is for your solutions. Computation of long-term capital gain for the assessment year 2021-22. Full value of consideration, that means the sales value. Here residential house are sold out, the amount 30 lakh. Less expenses of transfer, expenses on transfer 10,000. Net considerations 29 lakh 90,000. Less index cost of acquisition. Here cost of acquisition should be indexed because this residential house is a long-term capital asset. So here index cost of acquisition formula, cost of acquisition into 301 divided by CIF for the year of acquisition. That means here cost of acquisition 5,65,000 into 301 divided by 113. After calculated this, the amount is 15 lakh 5,000. Then after that, less indexed cost of improvement. Here also be the improvement informations are given here. Look here. The cost of improvement in December 2004 rupee 22,600. This property is a long term, so improvement cost also should be indexed one. Indexed cost of improvement into formula we know, cost of improvement into 301 divided by CI for the year of improvement. Under this case, cost of improvement 22,600 into 301 divided by 113. So indexed cost of improvement amount 60,200. Gross long-term capital gain 14 lakh 24,800. Less exemption under section 54. Less exemption under section 54 here applicable because residential house na ಸೇಲ್ ಮಾಡಿ ಇನ್ನೊಂದು ರೆಸಿಡೆನ್ಷಿಯಲ್ ಹೌಸ್ ನ ಪರ್ಚೇಸ್ ಮಾಡಿದ್ದಾನೆ. ಸೊ ಈ ತರ ಕೇಸ್ ಇದ್ರೆ he can eligible to claim under section 54. Formula what? Cost of new house or this amount gross long term capital gain, whichever is less. We have to compare these both values. Under this case, cost of new house 25 lakh or long term capital gain amount 14 lakh 24,800. After compare these two values, obviously the 14 lakh 24,800, that means gross long term capital gain is a exempted amount. So 14 lakh 24,800 minus 14 lakh 24,800, taxable capital gain or taxable long term capital gain should be nil one. Then one more question it is. Actually this question is your 2017 question paper. 2017 question paper question. The question is like that. Mr. B had purchased a residential house for rupee 2,26,000 in 2004 and 5. On 15th August 2020, he sold this house for rupee 10,52,000. He purchased a new residential house for rupee 5 lakh on 15/3/2021. The CIF for the financial year 2004 and 5 113, 2020-21 301. Compute capital gain for the assessment year 2021-22. This is for your solution 1. Computation of long-term capital gain for the assessment year 2021-22. Full value of consideration or sales value 10,52,000. There is no expenses are incurred under this case. So net consideration 10,52,000 itself. Less indexed cost of improvement. Indexed cost of acquisition. Here cost of acquisitions 2,26,000 into 301 divided by 113. That means 6,02,000. Less index cost of improvement. There is no any improvement. So long-term capital gross long-term capital gain amount 4,50,000. So here also be it is eligible to claim under section 54 because he purchased a new residential house. So exemption under section 54, new cost of house 5 lakh or gross long-term capital gain 4,50,000. After compare these two values, obviously the less value is 4,50,000. So the final taxable long-term capital gain amount is nil. Got it. Thank you for watching.